America is home to 33 million small businesses, the beating heart of communities across the country.
And proof that the American dream is still alive.
This is a show about those dreamers and doers and the communities they serve.
Their real life stories.
Their struggles and successes.
Their grit, determination, and passion.
And the people who fight
to keep their American dream alive.
I'm Alfredo Ortiz.
I'm Elaine Parker.
And it's time for another episode of Main Street Matters,
America's small business megaphone.
Hi, and welcome to another episode of Main Street Matters, America's small business megaphone. I'm Elaine Parker with the Job Creators Network, and today joining us is Caroline Melear from the R Street Institute, where she focuses on public policy and economic issues affecting businesses and the broader economy. She helps unpack how decisions in Washington, from trade policy to energy policy to global conflicts, ultimately impact entrepreneurs and business owners keeping America running. Welcome to the show.
Thank you so much, Elaine.
Well, I mean, first of all, I love that you kind of connect those dots for everyday ordinary Americans to really understand that faraway place in a bubble in Washington, D.C. actually does impact us on Main Street. We do it all the time at JCN and trying to connect the dots between the policy and reality. And that's really important because I think people really don't understand that. So thank you for doing what you're doing too, because I think we need so much more of it to educate Americans on how those policies really impact their lives. But when you look at the landscape right now, what do you see for small businesses?
Yeah, I think that there is a lot to be optimistic about. I think that the administration is broadly very business friendly, not just the president, but also a lot of the members of his administration, and as well as members of Congress. Senator Tim Scott, he is the chairman of the Senate Banking Committee, and one of his primary goals as chairman is advancing legislation which positively impacts small businesses, including increased access to capital and lending for small businesses. And we've also seen that be a priority of the administration in other ways as well, including some of the things that maybe aren't so commonly discussed around the kitchen table, but bank capital requirements. That was a huge ongoing issue going back quite a while now, but really came to a head under the Biden administration, which would have forced a lot of the financial institutions to hold onto a lot more capital, which then in turn means there's less available for lending. However, a lot of that has been reversed under the Biden administration and under the Trump administration. And with the efforts of the Federal Reserve, including Michelle Bowman, she has been kind of at the forefront of that. So there is a lot more capital that's going to be freed up for lending, which is very impactful for small businesses.
Yeah, absolutely. And speaking of which, I read earlier this week that Barney Frank passed away, who was the the famous bill is named after him, the Dodd-Frank bill, which kind of changed the whole how we do the banking system. So those capital requirements are part of that bill, which ultimately led to more than 2,000 community banks closing because of the regulatory burdens placed on those banks, which ultimately hurt our small businesses, because those are the types of banks that our small businesses across the country would go to. And a lot of our members believe that really led to instead of eliminating too big to fail, created a worse situation with these big banks that just got bigger.
Yeah, that's exactly right. So that was the Dodd-Frank Wall Street Reform and Consumer Protection Act, which was following the 2008 financial crisis. And that is a lot of what I evaluate in my role is the way that financial regulations are often very reactive. So instead of identifying what would maybe be a valuable framework for regulation, because there are, certainly there's places where regulation is necessary and beneficial. And I think we see that right now with the crypto market structure, where we're looking to have a good regulatory framework for cryptocurrency. But like I said, a lot of times regulations are reactive. And so when you get that reactive regulation, instead of kind of thinking about what's best for the economy, you're thinking, how do I fix this problem that happened? And you end up, a lot of cases, and certainly with the Dodd-Frank, you end up with regulations that are way too overburdensome. They end up harming those they purport to help almost always. I mean, that is something I consistently see with the regulatory landscapes I cover, is that the groups or the businesses or the individuals that regulations are meant to help are the ones who ultimately end up being harmed the most, because there seems to be a disconnect in Washington, especially on the left side of the aisle. You see it a little bit on the right, but really primarily on the left side of the aisle, a disconnect with the understanding of kind of downstream and second order effects. And so I do focus a lot on that on my writing, and how that things ultimately come down to impact small businesses and consumers.
Yeah, those unintended consequences. Yeah, I mean, I remember the 2008 collapse, and yeah, I mean, people want a reckoning. They want somebody to be held accountable. And typically you see that kind of overreaction from politicians that can end up with a piece of legislation that it ends up causing more problems than we originally had. And as you look at that Dodd-Frank bill over the years and what it's done, are there any efforts to going on now that to fix it or reform it that would allow community banks to, kind of thrive again?
Yeah, there are some things that have actually already happened. So in the One Big Beautiful Bill, which was passed last summer, that's kind of been Trump's landmark legislation thus far. In addition to a lot of the tax cuts, which I'm sure your viewers are very well familiar with, they also dramatically slashed the Consumer Financial Protection Bureau, which was one of the main aspects of Dodd-Frank. It was a newly created agency, and a lot of the regulations that have come out of that agency, especially under Democrat administrations, have been really, really overburdensome. And just like what I was saying before, have really come to harm on smaller financial institutions, credit unions. And so with the slashing of that agency, they cut the funding dramatically within the bill. And then kind of on the executive side too, outside of legislation, they have made a lot of changes to the agency, some which have been pretty creative, quite honestly, to kind of avoid the legislative process in order to kind of slash the agency. But yes, having that, I'm sure you have viewers who are familiar with that agency. It has quite a reputation in DC for being a very powerful agency that kind of has gotten to skirt the legislative branch quite a bit, which gets a little technical in the way it's set up. It was kind of the brainchild of Elizabeth Warren. And and so that has been dramatically slashed. However, there is, of course, without that being kind of enshrined in legislation, which in terms of budget cuts it is, but some of the other changes are not, the next Democrat president will probably just bring the agency right back to where it's been. So that's kind of the issue with kind of solely relying on the executive, is you end up with these regulatory swings back and forth, which really, again, becomes very, very unfair to consumers, to small businesses, to smaller financial institutions. And also, I will add some of the capital requirements, which were impacting financial institutions. A lot of that was actually coming as well from an international framework called the Basel framework. And so that's something that has been in the works for quite some time. And the Biden administration wanted us to follow exactly what the Basel framework was saying was needed in terms of capital requirements on an international basis. And the Trump administration has come in and said, we are not going to follow what an international body tells American financial institutions to do. So that is a big help as well.
You mentioned Tim Scott and his efforts and his focus on making capital available. He is the granddaddy of opportunity zones that was contained in the Tax Cuts and Jobs Act. Explain what they are and how they have impacted communities, in particular minority communities.
Yeah, I'm not extremely familiar with opportunity zones, except to say that it was for people to purchase property in kind of less economically developed places and receive tax benefits for that in order to develop those areas out. I'm not super familiar with the ultimate impacts, just to say that I know that they have been broadly positive. And that was something that was kind of touted even really on a bipartisan basis. I mean, Democrats were pretty happy with that legislation and the impacts of that as well, which is always a nice thing to see. It doesn't happen often, but we do occasionally see bipartisan support for issues in Congress. So yeah, I can't speak too directly to that, but yes, Senator Scott does continue to have more goals in mind for small businesses. I think with a lot of the other stuff that is going on in Washington right now, including crypto market structure, including housing bills, that has kind of, gone a little bit lower on the priority list, but from everything I have heard, it is still very much a priority.
Yeah, he's done a great job, and he really does think in terms of how does this impact small businesses? Because as you mentioned, those unintended consequences of a bill or a regulation can really disproportionately hurt a small business owner when you compare it to, say, a large corporation who, has floors of lawyers and accountants to help them deal with regulations. It's just not going to have as much of an impact on a large corporation. But when you talk about uncertainty from one administration to the next, particularly when we are governing more often than not now and through executive order and through regulatory agencies versus legislatively, you do see that swing back and forth. So it leaves our small business owners in a zone of uncertainty and planning. And as you know, planning is, that is what small business owners have to be able to do long term to be able to grow. What are you hearing most frequently about some of their biggest concerns?
Yeah, it is a huge concern, and it's a concern that I hold very closely as well. And really what it comes down to is that we have allowed the executive branch and its agencies to become far too powerful. And I think that we did see, especially at the beginning of the administration, kind of a concerted effort to reduce the size and scope of the federal government, specifically with the executive branch and the various agencies. But that didn't really, I think, come to fruition quite to the extent of what people were looking for. And I think the kind of the sad reality of it is once a president is sitting in the Oval Office and they have the power that the person sitting there before them had, it's hard not to exercise it, right? And especially when you see Congress have such difficulty getting things done. And congressional approval ratings have been, in the dumpster for a while now. And it's because it's very, very frustrating for Americans to watch and see that they don't get a lot done for the American people. In one way, you can view that as a good thing because it means we're not constantly getting a bunch of new laws and regulations and changes all the time from the legislative branch. But on the executive side, it means that they have gained a lot of power and they use it. And it is not something that has to be passed through a legislative body. And so, like you said, that means that the next president can very easily undo what the former president did. I'm not exactly sure what an ultimate solution to that is outside of, people kind of demanding that we have an executive with less authority and less power. But I think that we can also kind of see ways that the president does try and use it to the advantage of kind of more conservative policymaking. So, for one example, he early in this administration, he signed an executive order that was a 10-to-1 deregulatory initiative, which said that for every new regulation implemented, that they would unwind 10 existing regulations. And so far, that's actually been pretty on par. And so the fact that they have the ability to unwind those is good, certainly. But can they be wound back up in the next administration? Yes. And it is a huge problem. It makes these regulatory and compliance departments within large institutions They get a lot of work. They get a lot of man hours. There was actually some great research out of Bloomberg that talked about the millions of hours that have gone into regulatory and compliance work since the inception of the Dodd-Frank Act. This was kind of specifically for financial institutions, but it's a huge problem, and it's not something that has a great answer in terms of solving it now. But I would just say that people should be focused on the executive and how much power it's able to wield, and hopefully we can over time start to wind that down.
Yeah, I mean, I'd love to see the legislative branch function better. You're right. I mean, because we wouldn't see those swings back and forth with revoking executive orders. I mean, the day Joe Biden came into office, he sat there revoking as many executive orders as he could from the previous administration. And of course, Trump came in and did the same thing. And each side cheers on, their guy, right? I mean, that's what they want, but it doesn't really help, the average ordinary American in terms of dealing with it all and the fallout from this back and forth. And so if we had a functioning body that could actually pass laws and put them into play permanently, then we would have some better certainty. And that's just so hard on our small business owners. Even when you look at what's happened with inflation, I mean, with this run up of inflation under Biden, and when Trump came in, drill baby drill, we started seeing the price of gas come down. We now are seeing inflation heat up again. And it's tough for Americans. We're at an average of, I think, about $4.50 a gallon nationally. So, we're up there again. We're not quite as high as what we saw under Biden, but it's tough on small businesses and everyday ordinary Americans. One of the things that I would get so frustrated about in the Biden administration was the use of the word transitory as we watched the inflation rate climb and climb and climb and climb. And that was the word, transitory. Do you think that this is probably a better representation of what transitory inflation looks like right now with the Iran war going on and sort of being the direct result of it?
Yeah, I mean, I think it's pretty clearly a direct result. The oil and gas prices are directly going up as a result of the war, and that is directly impacting inflation. I mean, we see that quite clearly, but I think there were a lot of kind of economic word games that were played under the previous administration. They quite literally changed the definition of recession in order to not say we were not in a recession. So I think that there were all sorts of things that were done, which were kind of a denial of reality. And the truth is we've been kind of in an economic hard time since the onset of COVID. I mean, the turmoil and the tumult that set off has not really gone away. And I think people are absolutely feeling it. And it's a struggle for businesses. It's a struggle for families. Going to the grocery store it remains expensive. And yeah, inflation has, over the course of the Trump administration, it has cooled. It is not at the highs that we saw under the Biden administration, but those prices are still elevated from where they were, 6 years ago. So it is a huge challenge, especially when wages have not kept pace. Certainly Americans are struggling. And it is, there are things that, I think a lot of people can point to that maybe the administration could do to help ease that a little bit more. But I think sometimes people put a little bit too much, on the executive, and this is across the board, no matter who's in the office, of kind of blaming the economy directly on the president. I think it's so much bigger than that, certainly. But I think that there's certainly a few things that I think we could kind of directly associate. In this case, that I think it would be fair to say, hey, the war in Iran is causing higher inflation, higher gas prices. Tariffs, certainly, there's a lot of economic data that would say that tariffs have caused increased consumer prices, and small businesses have had to take a big hit on tariffs. A lot of them chose to absorb the costs. instead of passing them on to consumers. So, there are a few things that I think people have grown kind of frustrated within this administration. But having said that, we are still really in a better place than we were. So there's that at least.
You mentioned that the Biden administration were this denial and word game going on. And I think that denial really hurt the administration in terms of credibility at the time. Do you feel like the Trump administration is acknowledging that pain this time in terms of we know this is happening, but it's because we have to do this piece, and we'll get back there. Do you feel like they're connecting in that way?
I think there is a little bit of that. I think that the president, since his first time running, he has always loved to tout, the Dow and where the Dow is at. And so he leans on that a lot. I think this morning we were above 50,000. So he leans quite a bit on those numbers and to say, look at the strength of the economy. 401k balances is something else he likes to lean on a lot. In terms of kind of those kitchen table issues, gas prices and grocery prices, I think that there maybe is a little bit of a disconnect coming out of the White House on that. I don't know that means that they aren't actually addressing it. I think that they probably are, and that the job needs to get done in both of those places, regardless of how you feel about tariffs. They feel that they have a job to get done with tariffs, and they intend to see that through. And same with the war in Iran. So, I think the messaging sometimes can be a little frustrating to Americans who feel like they are struggling and the administration maybe isn't seeing them, and kind of especially when you compare it to some of the talk on the campaign trail. But some of that is politics. I mean, the person sitting in the White House wants to project confidence. They want Americans to feel that things are good, and sentiment is important. So how people feel about the economy does matter, independent of how the economy actually is doing. So if the White House were to say, we know things are really bad, that wouldn't necessarily be the best messaging either. So it's a tricky place to be. It's politics.
Well, it's tough because here we were, kind of eagerly anticipating a new Fed chair coming in to lower some of the interest rates, which would, hopefully impact mortgage rates, and there'd be some kickstarts there. And, we enter the Iran conflict, and I get why. I mean, I certainly am in agreement with, Iran not having a nuclear bomb. But we were anticipating all this. And now that inflation has increased, the likelihood of seeing a rate cut continues to elude us and look farther and farther away. And I'm just curious what your thoughts are on kind of that. I mean, I don't know how the Fed chair comes in when we're heating up so much, and lowers rates. I mean, what do you think?
Yeah, well, and I think a certain reality of it as well as the Fed chair was always going to have to convince the other governors as well. So it was always going to be an uphill battle. But yeah, I mean, I was even reading this morning that it's actually looking more likely that interest rates would tick up due to the activity in the bond markets. So I don't have a lot of confidence that we'll see lower interest rates anytime soon, unfortunately. But we'll just kind of have to wait and see. I mean, things can change quickly, and perhaps we'll end up with a more swift resolution to the war. I think that certainly is what the administration was initially anticipating. And I'm not a geopolitical expert, but it does seem that Iran has quite a bit more resolve, I think, than people were expecting. So maybe we will ultimately see kind of a more swift resolution, and things will start to shake out in a more positive manner. But time will tell.
Yeah, it's interesting because when you have this kind of conflict that impacts, worldwide energy prices, and you see this spike, go up, even if everything ended today at 5 o'clock and the Strait of Hormuz opened and oil was flowing. We're just the sort of the downriver effect is going to take so much time, and we're heading into the midterms. I mean, I see why President Trump focuses on the stock market, because it actually kind of defies what you would expect to be happening in the stock market. You know, every time I think, oh my gosh, the price of oil is up again, what's the market going to do? It doesn't do what I think it's going to do. So it continues to defy that, and have the confidence that obviously they know something we don't know. But it's just interesting in terms of how long it takes that kind of domino effect to happen. On the way up, it's fast. I mean,
right.
This the stuff in the ground that was already in the ground at the gas station. The price goes up that day. So what are your thoughts on timing? If we had a crystal ball and we knew today at 5 o'clock it was all going to end and we would start oil flowing, what are your thoughts on timing?
In terms of gas prices specifically, I really couldn't say. I mean, they actually, you're right. They go up right away, almost instantaneously, but they actually tend to kind of come down pretty quickly too. I mean, that fluctuation is something we've seen over many, many decades. So I think, the data would probably be fairly robust on that. It's not something that I've looked into, but I would think that ultimately the prices would come down pretty quickly. But all of those other inflationary pressures that people are feeling, food, housing, medical care, all of that, those things coming down, that is a whole other story. That's a lot more complex and a lot more longer time horizon.
Yeah, I think so too. If you were advising policymakers today, what would be your biggest piece of advice to them right now?
I would say, legislators act in a deregulatory manner. Let the free market be a free market. Let's limit the crony capitalism and let the free market do what it does, and accept the fact that sometimes means that things fail, and that's okay. That's what the free market is supposed to do. But stop trying to be the economic babysitter, and let things do what they're meant to do instead.
Yep, free market for sure. Well, tell everyone where they can find out what you're working on at R Street, and tell us a little bit about R Street before we go.
Yeah, so R Street is a public policy research organization, more commonly referred to as a think tank. So we research all sorts of different policy issues and areas. I focus on financial services, but we have a broad range of other issue areas like energy and environment, criminal justice. So we run a broad range of things. AI and technology is another big one, which I work in conjunction with quite a bit. And we are right of center, free market, limited government. So we advocate for those principles in every arena across the board. Of our policy research. You can find more of our work at rstreet.org, and you can follow me on X, LinkedIn, Instagram at Caroline Melear.
Excellent. Well, Caroline Melear from R Street Institute, I want to thank you so much for taking the time to join us, talk to us about the broader economy and small business. Always appreciate your time.
Thank you so much, Elaine. It was a pleasure to be with you.
And thank you all for tuning in to Main Street Matters. Main Street Matters is part of the Salem Podcast Network. New episodes drop every Wednesday and Friday. You can subscribe to the show wherever you get your podcast from, and we'll be back soon with another episode.